Terra's downfall marks one of the most severe events in the history of crypto. The stablecoin UST lost its peg, Luna was free-falling, and the chain finally got halted. And within a couple of days, values worth $45 billion just got destroyed. But how did this all happen? Was this an attack on crypto in general? And what does this drama mean for Cosmos and the interchain specifically? This is what I will explain to you in today's episode. But before I forget, please make sure to subscribe to this YouTube channel and give this video a like. This triggers the YouTube algorithm and leads to an atom pump on the other hand. And now let us dive deeper into the Terra drama. Before diving deeper into the drama, there are some things that you have to understand. First of all, many events that happened were able to get confirmed. However, some are just rumors and theories. Be careful with the information you get on Twitter and co. Another important thing to know is how Terra works or used to work. Terra was a blockchain using the Cosmos SDK. The Cosmos SDK is a developer toolkit developers can use to set up their own customized blockchain. Developers were able to deploy applications on top of Terra. However, Terra was primarily known for offering various stablecoins. The most important and famous one was called UST. UST was an algorithmic stablecoin that was pegged to the US dollar. So, 1 UST was equal to 1 US dollar. The stablecoin was backed by Terra's native cryptocurrency called Luna. The stablecoin was able to keep its peg to $1 by a burn and mint algorithm. Users were able to burn $1 worth of Luna to mint 1 UST. This also worked vice versa, of course. Let's say that UST was trading at $1.30. In this case, people would have had the incentive to mint more UST. But because more people mint UST, the supply becomes larger, which brings UST back to $1 at some point. As already mentioned, this also worked the other way around. So, if UST got traded at 70 cents, people had the incentive to mint Luna by burning UST, which decreased the supply of UST and eventually brought the UST price back to $1. By selling the freshly minted Luna immediately afterward, traders could also make money in that process. During minting Luna or UST, users needed to pay a small fee in Luna called seigniorage. The seigniorage fees used to go into a community treasury. In September 2021, however, the community decided to burn Luna to mint UST. The Terra community minted 4.5 billion UST by that process. This money was then being used to bridge UST to all kinds of other blockchains, including Osmosis for example. This is how Terra used to work and became big. But now let us talk about how this concept finally failed. Generally speaking, the crypto market was not in good condition anyway, which made the whole burn and mint concept fragile as there was less buying pressure for Luna. But everything started to go down when the Terra team withdrew a vast amount of UST from Curve Finance. Curve is a stablecoin exchange on Ethereum and a true OG protocol that was founded in the very early days of DeFi. Simultaneously, a whale sold UST against USDC on Curve, which pushed UST from the USD peg for the first time. In addition, there are rumors that another whale sold vast amounts of UST on Binance at the same time, which pushed the UST price down even further. But this is just a rumor and is not confirmed yet. However, UST was below the $1 peg, which is why funds and VCs sold vast amounts of UST because of safety concerns. Also, the Terra lending protocol Anchor was affected as many investors and institutions removed their UST from Anchor. On Anchor, people were able to earn a fixed interest rate of around 20% on their stablecoins. If you want to learn more about how this worked, check out our previous episode by clicking on the link in the right hand corner. In total, more than 9 billion UST got removed from Anchor. As you can imagine, this pushed UST significantly from its peg. Of course, Luna was crashing seriously, and the selling pressure became so big that Luna's market cap went below UST's market cap, which is why Terra entered the death spiral. UST was not backed anymore and therefore unable to absorb the selling pressure. Many people used the last chance to exit before it was too late. The low Luna price finally made the Terra blockchain itself more fragile, as it was easier for attackers to become validators on Terra to manipulate transactions and governance proposals. Because of this, Terra decided to hold the blockchain for some time. But in the end, this was not very helpful. The team was solidly able to win some time. Terra announced a couple of weeks earlier that it would continuously buy Bitcoin to back UST in addition to Luna. The team dumped its Bitcoin position to repeg UST to $1. There are rumors that the attacker who started this whole mess initially simultaneously opened a short position on Bitcoin. With the profit of that short position, he continued to attack the Terra network. But again, this is just a rumor. So, this was how Luna and UST went down to zero. There are dozens of rumors about who could be responsible for this attack. But most fingers point at TradeFi and Wall Street. And to be honest, we at DeFiTimes believe so too. First of all, this attack required a large amount of capital, and besides, the whole crypto industry will suffer from this long term as prices of all cryptocurrencies go down significantly and more regulators will now draw their attention to the crypto space. So in short, this was most likely not only an attack on Terra, but the whole crypto industry. However, Terra announced a recovery plan. The recovery plan aims to fork the Terra blockchain and rebuild the whole project from scratch with the lessons learned from the latest drama. But to be honest, we at DeFiTimes are very skeptical about this. The trust in Terra is gone, and besides, many rumors about Do Kwon, the founder of Terra, appeared that say that he was involved in another stablecoin project before building Terra. And this project failed as well, and many people lost vast amounts of money. Besides, developers need to get paid. This is why a lot of human capital will leave the Terra ecosystem, making a Terra comeback even more difficult. Speaking of human capital, let us focus on what this all means for Cosmos. Like so many other ecosystems, Cosmos was significantly affected by the Terra drama. Osmosis users with UST pools lost vast amounts of money, and many DeFi projects lost liquidity and trading volume. But again, you can replicate this to almost every ecosystem. Still, there is one advantage other ecosystems don't have. The thing is that many developers who worked on Terra or deployed projects on it are forced to seek alternatives now. So the question now is where all the human capital will go. As Terra leveraged the Cosmos SDK and was IBC enabled, the interchain is a way more familiar environment for these developers. They will find it much easier to kickstart developments again. Two projects that could profit significantly from that are Juno and Osmosis. Juno offers permissionless CosmWasm and Osmosis will likely do so too soon. CosmWasm is a module developers can plug into the Cosmos SDK to support smart contracts, and Terra also used CosmWasm. When starting working on Cosmos, Juno or Osmosis, it will be a same but different moment for the former Terra developers. This is why the Terra drama could be bullish from a fundamental perspective for Juno and Osmosis. To wrap things up, Terra's downfall marks one of the most severe events in the history of crypto and will have severe consequences for the entire crypto industry. Dozens of VCs and funds were exposed to Terra and many crypto projects held UST to pay for their expenses. That said, many crypto projects will now find it hard to survive. Besides, the event will also draw the attention of regulators to all kinds of stablecoins. Considering the rough macroeconomic situation, we think that another crypto winter has officially started. Nonetheless, we believe that developments will continue as a lot of smart money is in crypto, and this capital is here to stay. So the developers. Some former Terra developers might leave crypto, but many will most likely start to work on Osmosis or Juno, which is good for the interchain. Still, the current mood in the space is very bearish. This is why we at DeFiTimes did a lot of risk management in the past couple of days. However, please note as always that we at DeFiTimes are no financial advisors. All content is strictly for informational purposes only. None of our statements represent financial advice. But now let us know how you experienced the drama. Also, let us know if you think this was an attack on crypto in general. Subscribe to this YouTube channel and give this video a like if you want to see more educational videos about the interchain. And with that being said, I hope I will see you next week for another episode of Simply Explained and This Week in Cosmos.